Well, welcome back, everyone, and welcome to election night. Hope everyone had a great day in markets. It was another good day in the active trader room for us, where our insights and tools helped us identify likely outcomes, and I did a little live trading again today. I'll share some of that with you in just a moment. Over to the market with you right now into election night. Well, when you think about election night and what's likely to happen, we are in a downtrending market where the market is expecting more GOP control to be established, which is likely, and a good chunk of that's probably priced in. But the market tends to work as a reactionary mechanism and as a discounting or valuation mechanism. A reactionary in a very short-term time frame, valuation discounting in a more mid to longer-term time frame. So if we're thinking about the now, hours to a day or so, the reaction could be outsized, even though a good chunk of the positives may be priced in for the market, according to their expectations on which way the election leans. This has taken the S&P 500 off of lows in early October up through the center of that year-to-date linear regression channel, above that one standard deviation line, a little too expensive, pulled back and tested the center line again, bounced off of that last week. And as you zoom in and take a look at where we are across all of these colorful lines on the screen, I want you to note that you've got weekly pivot lines here. So you've got the top end of the pivot range here at $400.11, 356.91. You've got the center of the range here, which I affectionately call the mattress. We're above the mattress on the SPY. We did manage to get above the mattress on the Qs in today's trade, as we did see yields come down and the long bond give us a bounce, albeit an inside day largely versus yesterday's red candle, but a bounce indeed. And we did see some declines in the dollar today. Now, the dollar is getting a bit oversold. The long bond is getting not too overbought. It is still oversold, but it does have formidable resistance above it. And in today's market, the decline in yields and the rise in effectively the NASDAQ, very positive. And we also did see some lagging from the Russell, but it managed to close right above the top lip of its mattress. Now, in market today, I was looking at some long side trading coming from some of the tools that you heard Rob teach about, the ITP tools, in last week's market and over the weekend. Some outstanding sessions that he had conducted, and using similar tools, tactics, same tools, tactics, and strategies, I was able to gross $437.50 in the active trader room today. Now, you can see that there's a lot of indications and a multi-time frame view here along with my dome. And I want to be sure to let you know that just because I was able to do this today does not mean that it's a guarantee of future results. Trade with money that you can wholly afford to lose. Make sure you consult your registered financial advisor before making any trading decisions. Trading comes with risk. Trade with money that you can wholly afford to lose. Now, when we looked at the market morning today and tried to get a sense of where things were, where things can potentially be, I identified using the intraday time frames and a multi-time frame view that there's a fairly decent chance for us to try and pop up today, come up to the 3840 to the 3870-ish area. We came just underneath that. We are in a buy zone on the daily chart. We're above the center of that linear regression channel. We're above the mattress, if you will. But we didn't close at the highs. And after hours, we've seen Disney take a bit of a spill. It's sitting at about $93.80 right now as I record this, after closing closer to $100. And that, again, is a testament to the changing consumer patterns that we are dealing with in this marketplace. It's not like it was before. We ain't in Kansas anymore, which does require having a steadfast, steady hand approach and managing risk very, very carefully in markets like these. Now, powerful tools can help us identify higher probability directional outcomes, and that's what I use today. I use the ITP tools, the TRP tools, and the annual member wealth charts indicators to help me with some of my live trading that I just shared with you. And of course, I'm looking for the price action on the S&P, which perforated the top of Rob's channel, but was not able to close above it, to close above it to signal that we may be able to take advantage of some more upside. And that upside, again, is all part of this downtrending year-to-date market. So I'm just going to pinch the chart back, and you can get a sense of over here, going back from the beginning of the year, we are overall staying within this downward sloping channel. Now, if I want to play in the sandbox that's called north of 38.70 all the way up to 40.36, well, I sure do want to see price action give me some reason to believe that it is going to head that way. Two pieces of good news in today's trade: being in a buy zone using the champion trend, and then seeing the MSR indicators, fast speed line, cross above the slow, seeing price action perforate the top of the channel, trying to pave the path to play in this sandbox. But again, it is event risk tonight. I think that the market is likely going to get what it wants tonight and has a little foray above this territory, that 38.70, 38.80-ish area, and potentially come into the lower 3900s. But I think that that would create an opportunity for a back test of broken resistance and back testing it as support before we actually carry on with a move that takes us up towards the top of the channel. I'm hunting in the area of silver, I'm hunting in the area of the long bond, and of course the equity indices at large, in particular the Qs. All trading is at your independent risk. Make sure you consult with a registered advisor before making any trading decisions, and make sure that you know how to use the tools that you have in front of you appropriately and to your risk tolerance. This Friday, speaking of tools, our very own Dr. Keith Wade is going to be coming in to teach a little bit about how to take advantage of Heikin Ashi candles and charting in active trading. Now, that session starts at 11 a.m. on Friday, and we all love Dr. Keith. We know that you love him too. He's going to be coming in at 11 a.m. Eastern Time on Friday to do a dedicated session to teach you a lot more about Heikin Ashi candles. Simply go to becomebettertrader.com/yes to join that session, get your ticket, and get situated and ready to go. I'm looking very much forward to that session, looking very much forward to seeing you in videos just like these. Have an incredible rest of your day, and we'll see you on the flip side after the election results tomorrow. Bye for now.